A couple of years ago, I only had one credit card and had this idea that all types of credit were some form of evil. After years of educating myself, I ended up finding a way to increase my credit score by 200 points just within a couple of months. I'm going to be going through the things that I learned that increased my credit score in such a short amount of time so that you guys can increase your credit scores as well.
Hey all you cool cats and kittens, it's
Azizz, and I want to make sure that you guys give this video a thumbs up and subscribe to the channel to make sure that you're caught up with all the amazing content. Credit scores make a huge impact in your life. They basically tell lenders whether or not you're trustworthy for them to give you money. A lot of people talk about these credit scores in fear because they don't understand how these credit scores are calculated. There are organizations called credit bureaus, and they're the ones who make your credit scores. In Canada, the two major ones that we have are Equifax and TransUnion. There are 5 different ranges that you can fit on the credit score spectrum. 300 to 560, 560 to 650, 650 to 700, 700 to 750, and then 750 to 850. I wouldn't worry about getting your score within the 800 to 850 range because as long as you're in the excellent range, it doesn't really matter. It's like in school where basically if you get anything higher than an 85%, it doesn't really count towards your GPA any further. So the sweet spot that you should be hitting for is somewhere in the 750 to like 775 range. Now I'm gonna let you guys in on a little bit of a secret. These credit organizations that I was talking about, they look at 5 different factors to calculate your credit score. The first factor that they look at is credit history, which makes up 15% of your credit score. Credit history basically is the amount of time that you've had your credit for. To calculate this, you would basically take the age of each and every single line of credit that you have, and then you would divide that by the total amount of time that you even had credit for. For example, let's say that you have 2 credit cards. One you've had for 5 years, the other you've had for 2 years. How this calculation is, it's 5 plus 2 divided by 2. This would mean that your credit history is 3.5 years. The ideal credit history that you should have is 7 years. This will get you somewhere within the 13 to 15% of the entire credit history factor. Also, because I know a lot of people are going to be asking this, but if you did have a credit card in the past and then you ended up canceling it, it is still factored into your credit history, but it will be dropped after 10 years. You will notice this because after that 10-year mark, you'll notice that your credit score significantly increases. The second factor is payment history, which makes up 35% of your entire credit score. Now, this makes a lot of sense as to why people think that this is the only thing that makes up your credit score, because it's such a high weighted factor. When it comes down to payment history, it's pretty self-explanatory. It's either you make your payments on time or you don't make your payments on time. Make sure that you have a good track record and you're paying all of your debts on time, because 1 or 2 missed payments will end up taking a huge hit onto your credit score. The third factor that they look at is credit diversity, which makes up 10% of your entire credit score. When it comes down to this factor, the more types of credit that you have, the higher that you're going to be ranking. At first, I thought the only types of credit were like credit cards and mortgages, but it turns out that there's a lot more when it comes down to that. There's credit cards and mortgages, lines of credit, student loans, auto loans, furniture purchases, and believe it or not, even internet and utility bills. Most service providers do end up putting this under your credit, so make sure that you pay those bills on time. Factor number 4 is utilization rate, which makes up 30% of your credit score. What utilization rate is basically the ratio of your unpaid balance divided by the total credit limit that you have. Let's just say, for example, you have a couple of credit cards, you also have an internet bill, a cell phone bill, electricity, all that stuff ends up totaling up to $10,000. Let's just say that you have an unpaid balance of $1,000. You would then take 1,000 divided by 10,000. That would end up equaling to 10% utilization rate. For you to get in the excellent range, you have to have from 0 to 9%. My personal suggestion is just pay it off completely so that it's at 0, because failure to do so will end up damaging your other factors of your credit score. Now, factor number 5 is new credit, which makes up 10% of your credit score. Yes, what you heard is true. By opening new lines of credit, it will hit your credit score. This is why it's very important that if you decide to open a new credit line, you have to make sure if it's pre-approved or you still have to go through the approval process. If you're already pre-approved, this is going to be a soft credit check, Whereas if you still have to go through the approval process, it's going to be a hard credit check. I'm going to make a video explaining the differences on these two because I don't want to make this video any longer than it is. So stay tuned, on the lookout. Contrary to what people say, opening up a new credit line can actually increase your credit score in the long run. Opening up this new credit line can affect 3 of the factors that make up your credit score. The first factor that it influences is your credit diversity, which makes a lot of sense because by getting a new credit line, you're adding onto your arsenal of different types of credit, which will then increase your credit diversity. The second factor that it influences is your credit history. For this factor, it really depends on your situation. It would be a lot more beneficial for you to open up a new credit line in the beginning of your credit journey, not when you're 5 years, 7 years, or even 8 years in. It can take a 1 to 2 year hit on your credit history average. You will also be decreasing your utilization rate because you're opening up a new line of credit. This then increases your total amount. For example, dividing 1,000 by 10,000 versus dividing 1,000 by 12,000, you're decreasing your utilization rate, thus increasing your credit score further. After knowing all 5 factors that made up a credit score, I ended up devising a strategy that would end up increasing my credit score as much as possible within the shortest amount of time. I hope I delivered enough value to make sure that you guys create your own strategies to make sure that you can also increase your credit scores within the fastest time possible. If you found value in this video or even learned something new, make sure that you share this video with your friends and leave it a thumbs up so I know that you guys are on the right path to financial freedom. Thank you for watching. This is Azizz signing out. Peace.